The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 4th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future, versus prisoners of our past. Hope everyone out there is having a great day. Yeah, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to give us a call at 877-927-6648. Now, if you can't call in and you'd still like to get a question answered, well, you can send me an email. Now, today, you've got to send that email. We're having problems with our TFNN server. So you can, my backup email would be steve@masteringprobability.com. So steve@masteringprobability.com. If you've got a question, go ahead and send me an email. If you send it to steve@TFNN, I will eventually get it. It's just not likely to be gotten between now and the end of the show out there. Of course, if you're inside our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, you get all the U.S. indices actually trading to the upside. Dow's up 57 points. Now, S&P's up 17. NASDAQ 104. Russell's up 9. Semi's up 42. Training's up 142. The one that's really flat out there is the NASDAQ 100. Still problems with the Apple, which negated its bottom pattern yesterday. It needs a bullish reversal candle to confirm a Rhodes Momentum Indicator bottom signal. Gold is up $18. Silver is flat. Lights Recruit is not flat. It's down $3.62. Trade out to $73.31. Natural gas up 8 cents. The 30 Treasuries up 1.5 points. Trade out $127.22. Lead the charge. Dollar-wise, the upside, you got Equinix up 18 points. Asmill Holdings 18. IDEX Laboratories 13. Charter Communication 12, and Restoration Hardware is up 12 as well. Humana leading the charge to the downside in the healthcare sector, off $13. Microsoft's down 13. Vera Therapeutics is down about 12. Hubble Inc. down 11. Cigna down 10. United Health down 10. So that healthcare sector struggling again this morning. So where do we want to begin? Let us begin with, let's go take a look at the 2-hour time frame charts for the equity futures, because they're the ones that are really kind of controlling the signal information as to what the market's intent is. So let's go see what they're communicating to you and I. We begin in the upper left-hand corner. You've got the ES Mini. What did the ES Mini do? Well, back here at 8 o'clock, 6 o'clock, I take that back, 6 o'clock in the morning yesterday, there was a TD9 count top that formed. And what did price do? It took its price all the way back to its breakout level of support that was established by the TD9 count pattern out there. And that got price back to 38.23. That level was tested and rejected. Price, if you can't bust them to the downside, tries to bust them to the upside. The upside being the TD9 count breakdown resistance level of 38.71. Now, what we have out here, and what is likely to occur by 12 noon, is bar number 9 of a TD9 count pattern should complete. That says that the ES Mini could or should find a short-term top or some type of top between noon and 2. It's a 2-hour time frame chart that we're looking at, and the high of a TD9 count pattern, or low, in this case here we're taking a look at a high, can occur on the bar following bar number 9. Now, it's only 11:10, and the ES Mini must close above 38.61 at 12 noon in order to generate that ninth bar. Price is above its green oscillator and change line that's consolidated with inside its profile. So just expect or anticipate some type of short-term top to occur between noon. Well, actually, it could have already occurred at this stage here, but let's just say by 2 p.m. That's the message for the ES Mini. The message for the NQ, it does not have any kind of top or bottom signal. It ran into resistance at its TD9 count breakdown resistance level of 11,036. But on the 2-hour time frame chart, looks like the NQ may get its signals from the ES, maybe the Dow, could also be the Russell 2000. So if we take a look at the Dow Equity Future Contract, you're looking at the lower left. It has already completed bar number 9. You can see this bar here that is working on the noon time frame is the higher high. That just simply identifies a TD9 count top. Now, if price closes over the high, and I'm going to suspect that by 12 noon we don't get over that high, we could, but if price closes above 33,498, that's assuming we don't get above that high between now and 12 noon, that would negate the signal. That would tell you about a strong momentum move to the upside, but there is also resistance at 33,567. There's resistance at 33,656 out there. So those, and the real resistance out here is the actual TD9 count top from yesterday morning at 6 a.m. And that's at the 33,643 level out there. So that's a price that price would really have, price that price, how about that? Would have to close above to tell you that the Dow wants to head to the upside. In the case of the Russell 2000, it forms a TD9 count top. Price pulls back to its breakout level at 1755. It now has bar number 8 of a TD9 count pattern, certainly a 9th bar. Looks like this will complete inside the Russell at 12 noon. But remember, that high can't take place on the bar following bar number 9. So to summarize it, the ES and the Russell 2000 are suggesting that they will form a top anytime between now and 2 p.m. The Dow has already formed that top. I pay attention to the Dow, kind of the leader of the pack there. And again, if price closes above 33,498, that's going to suggest that the rally should continue. Of course, in order for it to continue and really get its legs, price has got to close above 33,643 out there. So that's the overview of the markets out here. Now, what should the bulls be able to do? Well, one of the things that we should take a look at is market breadth. So for market breadth, what we're going to go take a look at first here is the New York Stock Exchange. The New York Stock Exchange, we're going to take a look at its advanced decline oscillator. The advanced decline oscillator, that is panel number 2 on this chart, is the difference between the 39 and 19 period exponential moving average of the advanced decline line. That is a mouthful. Nonetheless, when price is above the 0 threshold level, that's the red line in panel number 2, that tells us that buyers are in control. What's below that is a summation index. Many of you are familiar with it. You don't see the chart? Well, now that's a problem. Stevie, change windows. What did you do there? I thought I changed it. I was sure I changed it, but it didn't change. Let's see here. Now we got it. Okay, thank you, Mr. Bill, out there. So now, again, we're taking a look at the advanced decline oscillator, which is panel number 2 out here, of the New York Stock Exchange. That's up at the top. What's down below the advanced decline oscillator is the summation index. Now, as I mentioned, when price is above 0, it is said that suggested that buyers are the ones in control. Below 0, sellers. Well, the line changes colors, red to green, as you can see out here, whether that line is above 0 or below 0. It's above 0 now. It closed just above it yesterday. Buyers are the ones that appear to be in control of the New York Stock Exchange, generally speaking. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I think we are on the air. Are we on the air? I think so. My apology for that, folks. Yeah, I think that we are on the air. So right now, so we're taking a look at market breadth just to try to get a feel for what the sense of the market is at this stage here. So we're taking a look at the New York Stock Exchange Advanced Decline Oscillator. That is in position. That tells us that buyers are the ones that are in control. We also, if we take a look at that spot volatility index, we did this during the market update at 11 o'clock. But here it is. What you can see, I'll just expand it out. You can see that the last 2 days, prices tested and rejected that 50-day exponential moving average. It's a real key level. Where prices below that, it tells us that buyers are the ones in control of the markets, generally speaking. That level is 23.18. So we've got 2 signals so far that suggest that buyers are the ones that are in control. But wait, we've got more. What more do we have, Stevie? Well, what we've got is we've got our TAS market profiles for 4 different time frames. The 4 different time frames would be weekly, daily, 240, and 60-minute. As you'll see, each of these are in the green zone of their dial. That tells us that buyers are the ones in control, meaning that there are more instruments trading above profile, so above resistance, than those trading below profile. If you take a look at the daily time frame as an example, 183 instruments above profile, 90 below. If we take a look at the weekly time frame, on the weekly time frame, 134 above, 76 below. If we take a look at the 4-hour time frame, 303 above, 103 below. If we take a look at the 60-minute time frame chart, 348 above, 83 below. Well, we've got more, and we're just focused right now just on the S&P 500. So let's do this here. Let's go ahead and move this over to a different screen. Let's pull over the 30-minute time frame for the S&P 500. And here, what we have is 267 above, 40 below. So I ask you, from a market breadth standpoint, what do you think the market is likely to do? Well, here's what we do know. Those of you that are playing it to the short side, be very careful out here. We've got all the market breadth signals are suggesting that we should see higher price out here. But wait, Stevie, we've got more. What more do we have? Well, we go to our friends from SeasonX and we can take a look at what they are suggesting the market should do in 2023. Now here on this chart, this for the S&P 500, I'll work some time. Perhaps tomorrow we'll take a look at it for the Dow. But what I'm looking at, you'll see these little check boxes out here. So the cool thing about this tool is you can choose whatever years you want to take a look at the seasonality. Now you have to have at least 3 years out here worth of data in order for it to have any kind of meaning. What I've chosen, what we're taking a look at right now, is really kind of the position that we're in. What do you mean by that, Stevie? Well, what we do know with certainty is we are in the third year of presidential cycle. So in the third year of a presidential cycle for the S&P 500, what does that look like? It turns out it looks substantially different, and we'll take a look at this here, substantially different than the normal pattern if we just take a look at every year put together. Now, what do you mean by that, Stevie? Well, typically the S&P, the Dow, what it does is it forms a top around the 5th of January, meaning tomorrow, around the 5th of January, 5th, 6th, in that first week. And then the market typically moves lower through the end of January, maybe early February. Remember, I've always shared with you there are two very important times for you to put money to work. Many people, look, I'm a CPA. I'm a cut, paste, and assemble kind of a guy out there. And before I really understood the stock market, well, we would tell our clients now I'm going back 40 years ago, 40 years ago, what we would tell people with regard to their IRAs is, hey, don't make that contribution until April 15th. Well, I have to tell you, that was about as stupid as a comment. It was an ignorant comment. Ignorant because I didn't realize what the patterns were inside of the stock market. Turns out the two best times of the year, if you want to really take advantage of that IRA contribution, then you got to get that money in by the end of January to really take advantage of it, to take advantage of the typical seasonal pattern. It turns out that in the third year of a presidential cycle, the S&P 500 doesn't make that same move. It just continues to move higher off of the Santa Claus rally low, which would be back in the October timeframe out there. So this has got us saying, something to think about. Now, Wednesdays during the third year of a presidential cycle, they're really pretty bullish. Guess what? Thursdays are the most bullish of those days during those years that we have selected out there. And you can see that January, which we would typically not see here, on average during the third year of a presidential cycle, is the leader out here. It's the leader. Now, maybe this isn't we're in the third year of a presidential cycle, no matter how we take a look at it. Maybe this isn't the pattern that's controlling things, but maybe it is. Now, if we take a look at the normal cycle out here, that's the only way I know how to do that with this tool, what you'll see that little bump. That little bump says January 5th out here is when we typically see the high. Now, that would be tomorrow. And then we see the pullback into the January. Now, this shows us on average for the S&P about January 13th. But I get here towards the end of January. It looks like that area ends up getting tested. So it's really about the end of January during a normal 4-year. If we didn't take a look at whether we're in a third year of a presidential term or anything along those lines out there. But this would be the normal pattern. But that's not what is in play as we speak right now as we take a look at the S&P 500. What about the NASDAQ? Well, I don't know. Why don't we go take a look at the NASDAQ? Because the NASDAQ is struggling. So let's go take a look at the NASDAQ. We'll pull that down here. NASDAQ 100 is what we want to look at. Let's take a look at the total time. Now, what I'm not going to be able to do here very easily, maybe I can do it during a break. We'll see. Here in the case of the NASDAQ typically moves higher into about the middle of January, then has that pullback into February, and then it's off to the races for the rest of the year out there. And in the case of just the normal cycle, turns out January is a pretty good month here for the NDX 100. In fact, it's its best month overall. During this entire, what do we have up here? I've got the 37 years worth of the NDX 100. Actually, I probably could. So it would be 2019. That would have been the third year. So 1, 2, 3, 4. 1, 2, 3, 4. You like my dance steps? 1, 2, 3, 4. 1, 2, 3. Oops. 1, 2, 3, 4. So I'm just trying to get to the third year. 1, 2, 3, 4. 2, 3, 4. And I think I've got one more. 1, 2, 3, 4. One more after that. 1, 2, 3. Now here's the presidential cycle term. Third year. third year of a presidential cycle for the NDX 100. It shows just a real small dip into the 3rd of January. That's interesting. That was yesterday. And then it moves higher from there. So that's the third year presidential cycle of the 37 years worth of data. So we've got 1, 2, 3, 4, 5, 6, 7, 8. Oh, it looks like I missed one. 1, 2, 3, 4. Here we go. Still doesn't change anything out here. But you can see January. Pretty explosive month out here. In fact, this is the best month of the year, typically during that third year presidential cycle out here. So just something to think about. Now, what does the rest of the market breadth for the NDX 100 look like? I don't know, but we're going to go find out. Let's start here with this chart. This is the 30-minute time frame chart. So let's put over the NDX 100, which, by the way, the S&P was in bullish mode. So too is the NDX 100 as we speak right now. 55 instruments above profile, 4 below profile out there. Let's take a look at here. We're going to break. But before we get out to this break, let's see if Stevie can change this over to the NASDAQ 100. You can take a look at this. Here you can see this is all set, all bullish conditions when it comes to its TAS market profiles. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow up 104, S&P up 28, NASDAQ 100 up 54, Russell's up 12 points. We spent really the first half of the show taking a look at the overall market breadth, the indicators for us For the S&P 500, we snuck the Nasdaq 100 in there. Again, in summary, everything is pointing bullish from a market breadth standpoint. You've got your New York Stock Exchange advanced decline oscillator in a bullish position. You've got the spot volatility below its 50-day exponential moving average. You've got the market breadth for the 4 different time frames: daily, weekly, monthly, 60-minute, 240-minute in bullish condition. The 30-minute time frame for the NQ is in bullish condition out there. So that's our summary at this stage here. We know that the third year of a presidential cycle is basically straight up. And what we also know now is that January is the best performing month. Will this year follow along that cycle? Only time will tell, and we'll tell you when we get to that time. Right now, we want to go take a look at the GDX. So we're going to change screens out here. I think we're going to change screens. Yeah, we'll change screens. This is for a caller. Somebody had called in. So we are having trouble with the server out here, our server. And so I guess the newsletters did not go out. This was from a subscriber who wanted me to go over the mining sector. Maybe some of the mining stocks, but at least the mining sector, that was the message that was passed on to me. Again, we are having those technical problems. Hector, thank you for sending in that email. So if you do want me to look at something, you've got to send that email to Steve at Mastering Probability today. And if you've sent one already and you're listening, you were going to listen to the archive and it was sent to Steve at TFNN.com, we'll go ahead. I'll go through those emails tomorrow. Those who sent me emails already to the TFNN account, once we get that up and going, we'll go through those. But right now, we're taking a look at the GDX. And as we take a look at the GDX is taking out a prior high out here. That prior high from the trading day of December 13th, which had volume of 27 million shares. So far today, inside the GDX, you have 11 million shares. So you've got volume inside the GDX. So before we take a look at any A to B equals CD patterns or anything else like that, let's just take a look at what the weekly chart is telling us. Now, it is only Wednesday at 11:32. This will be important when we come to Friday at 4 p.m. Will the GDX close above its TD9 count top out there? The TD9 count top is 30.45. We're at 30.83 right now. If you close above that, then on a weekly basis, the GDX will be above profile because the profile high is 30.46. It'll have negated a TD9 count top. And if we take a look at the weekly volume, now we are 1 day short here, so you kind of do some mathematic. But 126 million is on that TD9 count bar. So far for the week, we're only at 36 million. So we're really going to have to do the mathematics on that. We've only been trading for a day and a half at this stage here. But even if price takes it out with lighter volume, and I don't know whether it will be lighter volume, you can still form that A to B equals CD pattern on the upside. As we take a look at the GDX on the monthly time frame, prices traded above the top of its profile, which is at 29.55 out there. That is a bullish outcome. So now let's take a look at the possible A to B equals CD pattern, and we're going to do that with the weekly time frame chart. It's much easier to draw that in. So you got a nice Rhodes momentum indicator bottom that formed out at the September lows for the GDX. Now if we just simply take our A to B and we just simply multiply that, or we double that, we move that. Well, I thought I was doing that right. There we go. So it's copy and paste. This is the best part of my day. I get to copy and paste. I get to put that CPA stuff really to work out there. Now we take a look at this. The one-to-one price projection inside the GDX. It's a weekly chart, so it's over time. It's not going to happen tomorrow. It's not going to happen next week. Of course, I don't know when it's going to happen, but this is giving us a price target on the 36.35 level. Now, what I can visually see, and you can too, is that retracement, that B to C retracement out there, that is less than a 0.618 retracement. Looks like a 0.382 retracement. Well, typically when you get less than a 0.618 retracement on an A to B equals CD pattern, and at a minimum, you need to get to the 38.2% retracement. So that's the minimum that you're looking for. If you don't get a 0.382 retracement, you really don't have a retracement to speak of. In this case here, it looks like it is at least a 0.382 retracement. When you get that, you typically do more than a one-to-one A to B equals CD to the upside out there. So this is suggesting to Stevie that what price might want to do is get back to its highs, and those are the highs from April of 2022, and that's anywhere between 36.71 at the low, 41.61 up at the high out there. So it does look like that price is gunning after that. So I hope that helps you out. I don't know who it was that had called in for that request, but if there's additional information that you need on the GDX, or there was some specific stock chart that you wanted me to take a look at, please call back. At least let Al know what that is, and I'll be happy to get to that. We did get a request out here from Hector and Patty, and Hector and Patty want to take a look at Halliburton. So let's fire up Halliburton. HAL is the ticker symbol. In fact, what we'll do after Halliburton here is I'll go back and take a look at gold. So let's go take a look at Goldilocks, see if there's any, because we do know about the directional correlation between gold and the mining equities. So we should not ignore that. And I do believe that gold may be forming, or perhaps has already formed a TD9 count on its weekly basis, but we'll find out. In the meantime, let's take a look at Halliburton. HAL is the ticker symbol. Of course, what we should really do is read Hector and Patty's question, which goes like this. Happy, wonderful Wednesday. Well, thank you. Same to you. Halliburton, is this ready to take another huge run topside? Well, it has a Rhodes Momentum Indicator top. And in order to get back to that high, price needs to overcome its green oscillator and change line. So Hector and Patty, in order to get back, it's above the top of its daily profile. So that's the first beauty, and that's at 37.74. So you'd love to see it close above that to suggest this is getting ready to run back to its highs. Only if it takes out those highs will then that signal that this is getting ready to make another move to the upside. So the first level that price needs to overcome is that green oscillator and change line, currently at 38.58. So it's thereabouts. That 58 is going to change, as you know. If price is able to get above that, then what it should do is take on its bearish engulfing candle that confirmed the Rhodes Momentum Indicator top, and the high of that candle session is 39.79. So Hector and Patty, 39.79 is the number to write down on your pad of paper. 39.99 is the second number. Wait a minute, Stevie, you only have a small pad of paper out here. All right, then write down 39.99. because that's the top of the weekly profile. And if price can overcome that, then you'll have negated a Rhodes Momentum Indicator top on the daily. You'll be above the top of the profile on the weekly. And then it says you've got one more little battle. And that little battle inside of Halliburton is at 41.67. And 41.67 is the top of the monthly profile out there. So that's really the setup. No, we don't have a signal just yet that this is getting ready to run topside. What we most certainly do not have, though, as well, is we don't have a signal that this is getting ready to run to the downside out there. So I like the trade if you're in it. And just take a look at if you get it close above 39.99, then buy that first retracement, add to your position, things along those lines. So Hector and Patty, thanks so much for listening and writing to me, and I hope you have a wonderful Wednesday. No other questions that I see so far. So let's go take a look at those gold charts, see what those gold charts tell us. We take a look at Goldilocks. Right now, it's trading out at 1843. So in the case of gold, let's open up the daily time frame out here. I don't know I've got that. Here's the A to B equals CD pattern for Goldilocks. Now, this retracement here, this B to C retracement, looks like less than a 0.5, less than a 50%. So it's towards that 0.382. Suggests that in the case of gold, it should do more than a 1-1 A to B equals CD to the upside. The 1-to-1 price projection gets us into that 1907 area. Now, what price did yesterday, this had a Rhodes Momentum Indicator top. It was formed with this three-river evening star. The resistance level was the high of December 21st. That was at 1833.80. When price closed above that, as it did yesterday, it negated that pattern. So we don't have any other signal. Now, if a bearish reversal candle were to form, it would certainly throw up the caution sign. But not until then. Price should continue to mosey on up to that 1907 area. You're up 1% today. If you take a look at the weekly time frame chart, well, Stevie's got to go to my other charts to get the weekly time frame chart. And we have the music in the background, and so that's what I'll do during this break. We'll come back. We'll take a look at Goldilocks. Of course, I'd love to hear from you. 877-927-6648, whoever you are. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So I said we'd take a look at gold, so we're going to do that. I'm going to switch charts here just for a moment. If we take a look at Goldilocks, now this chart here, this set of charts, I should say, this set of charts here takes a look at how gold is traded in all the major currencies, those major currencies being euros, yen, and Great British pounds. Now, if you take a look at the very right-hand side, you've got gold expressed in pounds, which made a new all-time high. This is a daily time frame chart that we're looking at. It made a new all-time high back in March of 2022, March 8th to be specific. We're really not that far away from that high. 1581 is that high. 1544 is what you'd need if you were buying an ounce of gold in pounds today. If you're buying an ounce of gold in yen, you need 246,448 yen. But the point really about this chart is we do see that gold is trading higher in all the major currencies. It should retain those highs out there, it should retain the rally, and should continue. Now let's go switch back to that white background chart out there. As we take a look at those white background charts, this is for Goldilocks. We already took a look at the daily time frame. So let's look at the weekly time frame. Well, the weekly time frame shows the A to B equals CD pattern that you and I already looked at. What you'll also see is this week will form bar number 9 of a TD9 count. I assume at this stage here that what will occur is price will go on to form the bar following bar number 9, and the high in gold, or a short-term or temporary high in gold, is likely to form between sometime this week and next week. I'm going to go more likely next week out there. I'm going to go with price getting at least up to that 1907 level-ish out there. And that's really supported by the monthly time frame chart, which currently has price above its green oscillator and change line, price above the top of its profile out there. In the case of gold, are we traded above last year's high? I don't know off the top of my head. I think that we're not trading above last year's high. That's for sure. Sorry about that little brain fart. Steve, could you look at seasonality for gold, Mr. Bill? We can. So let me see. We're on this area here. So let's come over here. Let's take a look at gold. Let's pull down gold. Let's see here. Here we go. Here's gold. Now, what I want to do here is go, here's 54 years worth of gold. Here's where we're at today. So right now, what this chart here, let me make sure I'm showing this chart. I am. So this is suggesting that gold should rally up until about the third week of January. Well, that seems to kind of work with regard to that TD9 count top, and then a little bit of a pullback into the end of January, and then it resumes itself up into a high in February. At least that's just the general 54 consensus on average. what gold does. Should we look at gold in the third year of a presidential term? If I had an easy way to do that, I would go ahead and select that. You saw I had to do the manual process for that to get to the third year of a presidential cycle. But hey, that's nice just simply to be able to do that. So with regard to gold, it's just the concern out here is only on a weekly basis. Now, if we open up the gold chart, well, I'm not going to have enough data to do that. Darn. What I was going to do is put up a continuous chart just to see how well those monthly time frames, weekly time frames. Actually, I probably can do this here this way. So here's another chart that I've got. I've just got to change this to the weekly time frame. Don't pay attention to the oscillator and change line because it's going to be still set to, let me do this here as well. Let's at least get some more data in here, like about 5,000 days worth of data. Okay, obviously some old chart where I was trying to show the fish hooks out here. So do the TD9 counts work here for Goldilocks? Well, you tell me. If we come all the way back to the all-time high in gold, back in August of 2020 out there, that was a TD9 count. It was bar number 8 that identified that top. If we then take a look at the next low, it occurred right at the TD9 count breakout support level of around 1706.20. It was bar number 9 that identified the bottom. What does it do? It rallies up into the next top. That next top forms that top on the week of June the 4th. That was on the bar following bar number 9. Price pulls back to its breakout level of 1676.50. For those of you that are new to the TD9s, or you just hear me talk about this, what do you think? You think maybe it would be helpful to learn this tool? Yeah, I'm going to go with yes on that. And if you'd like to learn it, just go subscribe to Mastering Probability. You do it for less than 30 days. It costs you nothing. And you're going to find a tool that's going to be immensely helpful for you. So now we've got another TD9 count. This is the next one that is in play out here. So yeah, I'd say this week or next week we should see at least some type of short-term top inside of the GDX. So hopefully that helps everybody out, and especially the caller who had called in. Whoa. Oh boy, there's a bunch of server rules out there. Okay, what the heck happened? Where'd that go? Here we go. Okay, so now I'm back. You're welcome, Mr. Bill. So let me see here. Let me get my. I don't think there's any questions. Let me just check the email. See. Oh, I take that back. Mike McKinney. Oops, I'm sorry. I don't usually mention last names. Anyways, Mike. So just forget that. But Mike wrote in. Mike is our worldly guy. Portugal. Bom Ano Novo in Portuguese is Happy New Year. Well, thank you. Same to you. But what Mike really wants to take a look at is the Dow Equity Future Contract. He's got a position, and his question is basically, do we see the Dow getting above short-term resistance, which he has at 33,663. So the level, and Mike was able to catch the opening when we talked about the 120-minute time frame charts out here. So, Mike, what you also know is that at 33,702 is the top of the daily profile. My white background chart shows 33,703. So that is the level. So we got just a consolidation between about 32,940 and 33,702. The level that price needs to close above in order to, so you've got that one resistance level, then you've got this TD9 count on a 120-minute basis. That requires a close above 33,643. So those are the levels. And you've got another TD9 count that is going to complete here in the Dow Equity Future Contract in the next 11 minutes out there. So this looks like short-term top. Price should then pull back to its green oscillator and change line, 33,354. You say you can handle part of a pullback out here. You're looking at the Dow Diamonds, where you've got your spread, your vertical spread out there. But you can equate that to, well, I'll just put up the Dow Diamonds here. Let me just move over to the Dow Diamonds real quickly here. Let's get rid of Halliburton, DIA. Oops, that didn't work. Let's try to properly type this in. At least on the DIA, well, but the intraday, that's the problem. So is it a problem? Because I don't really use the 120-minute for the Dow Diamonds. I would use 130 just to get the bars even. So let's go ahead and put that in here. At least try to help out Mike on a 130-minute time frame basis. Load all historical information. What do we got out here? Maybe it did. There we go. So, and let's change that oscillator and change line to the correct time frame out here. So that time frame for the oscillator and change line, change that from 30 to 130, and there we go. So now we've got a good chart. So we don't have those same patterns on the 120-minute. Now, of course, I'm using 130-minute for the Dow Diamonds. So we don't have that same pattern, which is why we're really paying attention to the equity future contract. But, Mike, as far as a pullback or retracement inside the DIA, 330.62 or thereabouts would be the number that you would be looking at if that TD9 count on the Dow equity future contract for its 120-minute time frame takes hold. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's get into it. We've got about 2 minutes left. Royal Gold is one of the requests, RGLD out here. And just like, I take that back. So unlike, we took a look at Goldilocks here, there is no TD9 count top on the weekly time frame out here. In fact, what price is doing is taking out a swing point on a weekly basis. I did volume of 2.8 million shares. Again, we're short trading week out here. So far, you've only done 871. But on a weekly basis, Royal Gold looks like it's generated an A to B equals CD to the upside. As far as where that initial price target is, I'll just draw in the first line. We'll move that over to the C point, give you a ballpark idea of where this is targeting. And that would be the A to B equals CD, gets you up into the 135 level. 125.92 on Royal Gold is going to be the next resistance point. That's the top of the monthly profile. There was also a request to take a look at, was to take a look at Barrick Gold out here. So if we take a look at Barrick Gold, now on a weekly basis, Barrick is going to form bar number 9 of a TD9 count. This says on a weekly basis, you could expect or anticipate a short-term top or maybe something more than that to form by next week out there. That's on the weekly time frame. The monthly time frame shows prices taking on resistance. That's the top of its profile. That's at 1881. We're at 1883 right now. The daily time frame, no topping signal or anything along those lines. So everything looks pretty good with regard to Barrick Gold. The only concern out here is bar number 9 of that TD9 count. So something most certainly to pay attention to. The last instrument that we're going to take a look at is for Dan inside the Tiger's Den is ticker symbol LGO. And the LGO is right now trading out at 551 on a daily time frame. Price is trading above the top of its profile. So that is a bullish signal there. If we take a look at the weekly time frame, you've got a bit of a consolidation. Looks like what it's doing is going to go target its most recent swing area. That's a November 25th high. That's at a price point of 574. But you close above 574, Dan, you're off to 619. No bottom signal here on the monthly time frame. You do have that nice wave number 7. That's letter G, a Rhodes momentum indicator bottom out here on the daily time frame. So it does look like LGO, which is Largo Inc., wants to continue to move higher. Folks, thanks so much for joining us here. Stay tuned. There's great programming all day long. I'll be back with you tomorrow, 11 o'clock sharp. Have a wonderful Wednesday, and I'll see you on Terrific Thursday. Take care now.